Hello and good day to all friends. This is Mojtaba Rasti from the Thales team, and today is October 18th, 2025. I'm here with a Bitcoin analysis using the Thales Market Screener tool. Please note that these analyses are for educational and informational purposes only, and if you use them to take positions in the market, the responsibility for any profit or loss is entirely your own. So, the upward movement we expected yesterday, as you can see, did happen. We had predicted it would reach around 180 to 300 or 200 to 300, essentially making an upward move and then coming back down. But we consider the move from here to be more likely. The reason is that it has now hit this descending trend line. If you look closely, you'll see that if we draw this line, it would look something like this. It's really close now, really close to the point where we actually reach. A touch on this trend line and the price moves downward. If we take a look at the price on the daily time frame, you'll see. Here, the situation is a bit different on the daily chart. After 3 or 4 red-bodied candles, today's candle might close as an inverted hammer. It might, of course, because there's still about 10 hours left until the candle closes, and right now it's around. We're also at a time when the market could make some moves, and if this candle actually comes down further and its body gets smaller, closing as an inverted hammer, it could be a sign, though not a very strong one, of a decrease in this downward momentum. And we might see an upward move tomorrow if this candle closes the way we mentioned, or tomorrow's candle might move a bit upward. Here, the RSI also supports this idea. The RSI has moved quite far from its moving average and could lean back toward it, reducing that gap a bit before making another move downward. All right, let's take a look at the market screener to see what we can find there. So, from the start of today up to this very moment, for tomorrow's expiration, which is Sunday. And in the raw database, we have 2,270 bitcoins and this kind of picture. For tomorrow, there's a volatility setup similar to a short straddle. A volatility range with a floor at 106,500 and a ceiling at 108,500. So, it means we might drop down to around here and then go back up to about here, which is totally possible. It's not far-fetched at all. So, this volatility range is expected for tomorrow. If we move the slider forward to see if anything changes, nothing really changes. The overall pattern stays the same. Now, let's look at the process database. In the process data, it's the same volatility, but the lower bound drops to 105,500 and the upper bound goes up to 108,700. Our floor drops lower, down to 105,500, meaning we could go as low as here. Volatility for the day after tomorrow. Volume isn't high. In the process database, we have 538 bitcoins. Let's go back to the raw database. Let's take a look at the 20th expiration. If I add the 20th expiration along with the 19th, not much changes. But if I remove the 19th expiration and leave only the 20th, you'll see a shift, meaning it indicates an increase in volatility for Monday on both sides of the chart. It moved upward. Below 104,700, put buyers are in profit. above 109,200, call buyers are in profit. This shows expectation of increased volatility for Monday, with low volume, 400 Bitcoin small. If I move the slide forward, you'll see. In these last moments of trading, it takes on a bullish shape, though with only 123 Bitcoin, which is really low. It wants to go above 108, so on Monday we might. Actually, if we see a dip, we might witness another upward move. In the thoroughly processed database for the 20th of the month, the comprehensive process database clearly shows a more bearish market situation. If we turn on the delta, you can see that right now we're at a point where, with a price drop, we could see a decrease in delta down to 101. At 101, and again, when we get close to 101, with the price dropping, we see an increase in delta. That means put selling is happening. The price floor has been seen. So 100,000 still means we can go lower, and we have negative open interest. If you remove these, trading volume becomes very low, but notice it gets really low. If we remove those, the process data for tomorrow also turns bullish. Although here you can still see that, along with the price drop and the delta decrease, it can still come down to 100,000 on the downside. Let's go ahead and draw our indicator and update the zones. You can see the intersection of the buyer and seller curves. At the top, our agreement is at 108,400. Which is almost right at the break-even zone, leaning a bit toward the profit area. Our lower agreement is at 105,400, which is in the loss zone. And as you can see, the upper zone is where the highest agreement exists, meaning buyers and sellers are exactly in sync at this point. But in the lower zone, you can see that it's actually a disagreement area between buyers and sellers, because sellers don't want the price to go below 105,600, but buyers want it below 105,000 as the area where they start making a profit. So this upper area is our agreement zone. Let's go ahead and enter these on the indicator and continue. Well, as you can see, the upper and lower points of the indicator have been added. Our support level, compared to yesterday when it had seen 103 and 200 and moved higher, is now expected for tomorrow to be around 105,300. But our resistance, compared to yesterday's high, is still moving downward. The slope and momentum of this downward movement have also decreased a bit, and it's now at 108,300. Basically, it's about the same volatility range we saw for tomorrow and our main curve, meaning a support around 105,500 and a resistance around 108,300 to 108,400. Let's go update the zones and come back. Okay, you can see the zones. The volatility range has decreased significantly, which is the first thing that stands out visually. For tomorrow, my volatility range is around 105,500 to 108,000, and the lower zone is wider than the upper zone, but there's more consensus on the upper zone, as you can see here. And in terms of profit, of course, given the current technical intensity and the downward trend we're in, we expect to see this lower area first. That is, for the continuation of the downward move, we give more weight to the chance of going lower. But there's also a possibility that after seeing this area, around 105, we might bounce back toward 108. There's also a smaller chance that we move up first, maybe to 108, 108,300, or 108,400, and then turn downward. So that's it for the zones. Let's go and activate the short contracts here. And let's take a look at delta and gamma. Excuse me. Alright. As you can see, the shape of our curve shows that the sellers are dominant, mostly sellers. So we have a main short gamma for the ticker at 107,700. 107,700, which is where the gamma turns long. 107,700. Let me go here. This is the spot where the price has been seen several times. You can see here that the price has been here multiple times and has reacted to it. We see gamma to the downside. Around 100K, a short gamma 4. Look, around 100,000 here. And 100,000 is the spot where these gammas are actually the result of put buying by the taker. So, the taker has bought puts here, which means the other side, the maker, has sold puts. Assuming the market maker is involved, which is unlikely since tomorrow is a holiday and there aren't many big trades, so it's even less likely to be a market maker. But based on this interpretation, if the market maker has sold puts, their delta is positive. To hedge, they would sell the underlying asset. So, when the price gets close to this area, volatility and price swings increase, and we see intensified volatility. Okay, now for our key levels on the upside. Look, After these steps that we explained, we have this area here, which is roughly where the exponential delta movement phase ends. 108,800 is an important level, and it's the point where the red curve goes into loss. And this intersection at 111 is where all three curves intersect and where the delta phase ends on the upside. Of course, there are also some small steps here at 111,900. Very small, though. Also, look here, this point is important. 106,300 and 106,400, where the red curve enters loss on the downside. And you could say, although it's not the end of the exponential phase, we can say this is roughly where the exponential delta phase ends. 105,600 is the end here. This is the intersection of gamma and the red curve, and the end of delta is at 102,700 and 102,800. These are also important points that we can actually extract from the chart, so that we can have an overall perspective. We sense the gamma. Well, we analyzed the upcoming day to see what kind of outlook it gives us on its own. Now we can look at it once more. On its own, there's a possibility for movement in both directions, but if we move forward, the slide leans a bit more toward the bullish side. However, the trading volume is low. The point I want to highlight is this. October 24th, the upcoming Friday, and the trades that have been entered from the beginning of today up until now. Let me reset the filters again so that no mistakes happen. From the beginning of today until now, the raw database for October 24th. Well, as you can see here, again we have a volatile situation where we can go down to the 100,000 floor, and on the upside, up to 114,000. Let me move the slide forward. You see, the upward trend is gaining a bit of strength. Right now, we're basically at the bottom. The floor has been tested to some extent, and we have a lot of room to move upward in the profit zone. Of course, the volume and number of trades are low, but let's switch to the process data. The process data gives us. We can interpret a bullish outlook from it. That is actually up here. Look, up here we can have a move where the ceiling is visible. This ceiling, at most, is at 120 on the downside. Delta experiences a pause. Look, if we consider from around 105,000 down to 98,000, Delta doesn't change much with the price movement. If 98,000 breaks and the floor actually drops below 98,000, we're seeing a new low, meaning put selling. So this 100,000 to 98,000 range is an important area that seems like it could be a reliable support for us, supporting the price if we only consider the positive open interests. Again, you can see that for Friday, we see a volatility range from 102 to 114, where once again, the floor there is 102. The bottom of this volatility is 102, which is another important point in itself. Alright, we're back to our initial settings, meaning today's trades up to now for tomorrow's expiration. Let's take a look at the database and actually review the trade details. One point to note is, if you look at the main shape of the curve, specifically the delta curve, you'll see that the depth of penetration of the delta curve on the upside is greater than on the downside. This in itself shows that selling puts seems to be more than selling calls, and the price floor, which could be around 104 or the peak of this, roughly 102, or even lower, like that same 100,000 level we talked about, could be seen. Now let's see. Out of 2,270 Bitcoin, how much of it was bought? 1,016 Bitcoin were bought, of which 468 were call buys and 547 were put buys. So, put buying is higher. And considering the recent volatility we've seen in the past hour, it's likely that these puts haven't been realized yet, and we can expect to move toward them. Where is that? Below 105,900, these puts aim to profit. This is still some distance, meaning we expect them to be realized. So, the weight is toward the downside. Call buyers target above 107,700. Considering these shadows, they're looking at 107,700. Basically, they've gone up to about 107,500 or 107,600. So, dominance is toward the downside. Now, let's see what sellers are doing. Sellers sold 1,254 Bitcoin, 599 call sales and 654 put sales. As we said, put sales are higher, 654 puts sold. Where did they see the floor? 106,200. So, right around here. Therefore, this move toward the lower zone seems like we can prioritize it. Where did the call sellers see the ceiling? 176,000. 176,000. The barrier that was seen on this shadow, that's pretty much where it's been observed. So, according to this arrow, we're still leaning toward the downside and will consider it more likely. Let's go to the process database and see what we actually have processed for tomorrow. Negative open interest isn't very high, so let's set the volume to 10 Bitcoin. There are 14 trades of 10 Bitcoin or more, and as you can see, the bottom has been identified, a put-sell wall. Selling puts at 106,000 is the bottom point. 105 to 106 is the bottom point here. So basically, this is our lower zone, and the bottom point of this put is right here. It's a put sell. We don't have any block trades, but among our large trades, here we have a 24 Bitcoin trade, which is a put option at 104, marking the bottom at 104. There's also a 25 Bitcoin trade, again a put option at 105, and a 22 Bitcoin trade, a put option at 107. So overall, you can see there's also a 15 or 16 Bitcoin trade, which is a long put at 100,000. Altogether, it seems more likely that the market will move downward toward our lower zone. Let's take a look at the processed expiry data in the database from this current time. Or maybe it's better to consider the time from yesterday, Friday, for the end-of-week expiry on October 24th. Let's see what the processed database shows for October 24th. Look, we're at the bottom, at 105, 105, 104. If this level breaks, a series of contracts, see as the price drops, the delta decreases, and a series of put purchases will be triggered in a way that their stop could be at 100,000 or even 95,000. In the most critical scenario, it would be 95,000. But the midpoint, which is basically the gamma of the long position, is around 100,000. So, for the end of the week, if 104 to 105 doesn't hold as support, if 104 doesn't act as support, and we go lower, the overall curve shape also shows a downward trend. Let's increase the volume and see what happens with 20 Bitcoin for the weekend. But let me also check the open interest again. Oh, there's no change happening. There's no change happening. The bottoms are shifting a bit. Now, let's make it 50 Bitcoin, 41 contracts. And with 100 Bitcoin, it's 27 contracts. Let's increase it a bit more, 120 Bitcoin. Again, with 120 Bitcoin, the overall shape of the curve is such that here, at around 103,000, we see a bottom. Then there's a small move downward to about 98,000 to 100,000. The strategies we have here. Let's see what kind of strategy we can find here. Look, we have these two, and by these two I mean this one and this one. As you can see, both have a bearish outlook. They both have a bearish outlook and are aiming for profit below 100,000, meaning they're expecting the price to drop to around 98,000 to 100,000 by the end of the week. There's another one, and again, these are two strategies, each worth 2,000 Bitcoin, worth 2,000 Bitcoin that. Look. If we look more closely, between 100,000 and 112,000, these strategies are actually at a fixed loss, which is the premium amount they've paid. To start making a profit, the price needs to break below 99,000. So, this shows that by next Friday, we could possibly see the price drop to around 98,000 or even 95,000. Let me bring it back to that 100 level. Let's actually look at it between. Let's see Bitcoin holders. What strategies can we find here? Maybe you'll notice, for example, this one right here. This is a strategy that's interesting. This is a bullish spread, 113 for the weekend, for October 24th. 113 is at the peak here, which is really interesting. Its bullish peak is 113, so you can see there's a bullish outlook for the weekend. That means we're looking to establish a bottom here and then bounce back up. It seems like that's the prevailing view. Let's go and check out this strategy. This is also an open spread, again, 114, 113 for the weekend. Let's see what else we've got here. This is the same strategy we discussed. This one looks at the 98,000 or 100,000 floor, and so does this one. Among our strategies, some considered the 98,000 or 100,000 level, the lower end, for the price. We also had two bullish spread strategies targeting 113,000, this area here, for the price by week's end. So, it seems the price wants to find its floor. Let's check the 24-hour liquidation. On the lower side, our liquidity is higher, up to 104,000. On the upper side, up to 108,000. It's similar to what we discussed. It's possible we might see a move up to 108,300 or 108,400, then a move downward. We can keep that in mind. Let's check the 48-hour chart. Alright, 48-hour chart. Liquidity is concentrated lower, up to 4,000 and 3,000. Price remains volatile, between upper liquidity at 8,000 and lower liquidity at 6,500 to 6,800. Distance is almost the same, meaning it could sweep liquidity on both sides. There's a chance for a move up to 108,300 or 108,200, and by tomorrow, we'll probably see this area, 107,500 to 107,600. So from here, we could either move down right away, or first make a single move up toward 108, and then head down toward 105 to 155. Thank you for your attention. I hope this was helpful.